Charlotte McLeod with the Investing News Network, and here today with me is Joe Mazumdar, editor of Exploration Insights. Thank you so much for joining me. Great to see you.
Thanks for inviting me again.
Really nice to have you, and it has been a little while since we last talked. We figured out it was in June at the PAC that was in the summer. That was nice.
That's what threw us off.
It did. We got a little confused, but that was the last conversation, and I wondered if we could start by just having you talk about the health of the junior resource sector right now. How's it feeling?
Well, if we measure it by financings, the financings in 2022 are much lower than 2021, and that basically started after March. So after Q1, the financings, year to date versus the last year were pretty similar. But after that, the amount of financings just dropped. And part of it was, China's COVID zero policies impact on base metal prices. And then the bigger impact was the U.S. Federal Reserve raising interest rates, raising real rates, and having a very positive impact on the U.S. dollar, and that basically cratered a lot of commodities and cratered sentiment.
So during our previous conversation, we talked about you were shifting the Exploration Insights portfolio more toward copper because of the positive supply-demand dynamics. Is that still the direction you're moving? Maybe you could talk about the portfolio breakdown a little bit.
Yeah, and I'm only more encouraged or discouraged because I see a lot of projects that we want to see come into the window where we have these gaps not being developed or being slower to be developed, being deferred, and also production that's when somebody forecasts copper production or any kind of metal, it's sort of like, here's my base case, like actual production, and production always goes down, and then you have these development projects that are supposed to fill the gap, and then you got possible projects, and probable, possible, and a lot of the probable is expansions, and some of these expansions are being deferred as well because of issues in Chile and Peru, changing taxation problems, and also infrastructure issues, and so we're seeing that globally. And so for me, if anything, I'm more bullish on copper than I was when we last talked. But the COVID zero policy of China reduced the near-term demand for copper and had an negative impact on the copper price. But I think the medium, long-term copper dynamics haven't changed at all. If anything, they've gotten better.
So you mentioned China and what's going on there has dampened a little bit the situation. What about these recession concerns that we're seeing at the country level, also even at the global level?
Well, what's happening now is China's zero COVID policy has switched because of all the protests that they had with the blank page protest from last year. They went 180 on that, and so now a lot of the copper producers are having probably they'll have a better year this year. And if you want to invest thinking that copper is going to go up or any commodity is going to go up, the first one you want to tackle is the production, because production will see a lift in their share price much before a developer or an exploration company. But for an exploration company, they'll see an improvement in sentiment such that they could raise money, and that might be better for copper companies over, let's say, precious metals. I'm not sure I got your question.
I think we got it. And I'm wondering about, so when we hear about copper, we always hear about this tight supply-demand situation. Are there any numbers that we can put to it to put it in perspective for people?
Well, the thing is, it changes so much because, what you have is your base case is being altered. And just to give your audience an example, when I worked for Phelps Dodge as the market analyst, I worked as a market analyst and trader back in the early 2000s when copper started at about 50, 55 cents. We were curtailing production, and then we had our, forecast for production out to 2010, going 10 years sort of from where we started. And we had this project called Resolution, which is the big copper mine that Rio Tinto have down in Arizona. We had that coming into production in 2010. It's 2022, and I don't know when it's coming into production. So all these forecasts, who knows? So I've sort of stopped thinking that they're made in stone, but I can't predict the demand, but even if it's flat, the supply is not there. That's what I know. That's what you can put your hat on, because you know that from discovery to basically production, the average time is like 15 to 18 years. And if anything, it's taking longer. Like if we take what Trilogy in the Arctic deposit, with South 32 as a partner, 5 years of permitting just for the road that just got revoked. And so now they're sort of, I don't know what to do with the project, because if you don't have the road, you don't have a project.
Okay, that's pretty tricky, but I think
this is feasibility study. This is not exploration. This is something that would have come into production for that gap, and it would have been in the U.S., which they claim that they want these minerals and local production. The U.S., North America has no problem with mineral endowment. The problem is that the local governments, most of them, don't want mining. That's the problem, and they don't want processing. So it's hard to marry the idea of, hey, we want this carbon neutral society, we need these metals, but I don't want to produce them, and I don't want to process them.
Are we getting to the point where we see that change? Because it does feel like we're coming to the crux of the situation where we're going to realize, okay, actually we do need to be mining them.
I don't see that yet, because we still see Thacker Pass, the lithium project, that wants to get permitted, but all over the western U.S., drought conditions are making potable water or any water highly competitive, such that I don't think a mining project, I'm not saying that they're competing for potable water, but any mining project competing for potable water in the western U.S. will lose. So you will need either dealing with groundwater, treating it, desalinized salt water, an aquifer that is isolated, that nobody touches, something like that. Because they're trucking water like hundreds of kilometers now to communities outside of Phoenix because they don't have water. And that's where we've gotten to. And so, water is going to be difficult, and mines have to compete for that, and it'll be the ranchers, it'll be the NGOs, there'll be a lot of people that don't want the mines to take their water.
Okay, and so this, I think, ties into something that we were discussing before we turned the camera on here, which is this critical minerals theme that we're seeing at PDAC. You've seen it at some of the other conferences that you've been to lately. Yeah. And you were telling me, basically for these companies, it doesn't look like financing is going to be the problem, because there's car makers, things like that will step in and provide the money. Yeah. It's things like you've been talking about right now that will prove the issue.
Yeah, and not only the car makers, but we've seen the U.S. government, the Department of Energy, the Department of Defense put money into projects, like significant money, not a little bit of money, because they have significant capital, or budget, sorry. But if they invest in you as a project, there is no marriage between the probability of you funding it and it getting permitted by another department in the federal government. There's no link.
Which is kind of crazy, because you have part of the government that says yes, and then another part that is disconnected saying no. So how do we fix that?
I don't know. I don't work for the government, thank God. But I mean, that's what's got to happen. And we got to get to a pragmatic path, not probably an esoteric path, to just demand that 2030, we stop driving internal combustion engines, because that's not going to happen. We'll not be off of coal by 2030. Yeah. And if you see what governments are doing, like in China, they're doing a diversified power base, but they are converting more into alternative energy, but with the realization that it can't replace it that quickly. And if we don't get to that realization, we're going to make a lot of bad decisions.
So this to me is sounding like a recipe for, we want to have our North American supply chains. We want to be independent. We want to deglobalize. It doesn't really sound like you think that's accomplished.
No, I was talking about this, we have a piece of paper and you draw one dot and another dot. The shortest distance between two dots is a straight line. What the government wants to do is basically fold that paper and make it one point with no transition. So this idea of energy transition, there has to be a path, but everybody wants to get to it in an instant, but it won't happen in an instant.
Yeah, so we talk about the energy transition, but we forgot the point that's transition.
Yeah.
Okay.
And how long that takes.
Yeah.
Even the International Energy Agency, I think the IEA, I hope I got the acronym right, even in 2030, they think that coal is still going to be more important than the entire minerals and commodities used for renewable energies and for electric vehicles. still by 2030. And so if we underinvest in coal, oil, and gas, imagine the inflation on those underinvested commodities by 2030 when we can't have 100% penetration in electric vehicles because we don't have enough of these metals, because we don't permit any of these projects. Because the other layer of that is that we can't get the material from everywhere, because with the Russian invasion of the Ukraine, the market's been segmented. And so all these countries are looking to secure supply, and now you can't get it from everywhere.
Yeah, and this relates to things I've been hearing from other experts who I speak with. I've had people tell me, yeah, I'm looking at coal now. I'm definitely looking at oil and gas because they're being underinvested in, and that's going to create an environment where you can profit.
And people wouldn't touch thermal coal before, but now it's sort of like, well, yeah, it's got to come from somewhere. But it's like, when does a government, like the problem is in the West, we change governments every 3 to 4 years. But China has 10-year plans. So when they're building assets that technically in the Western sense of economic evaluations are out of the money. But they know when they get into production, they'll be in the money. But they can't wait.
Yeah.
You know, and the whole thing is getting security of supply. So they've been doing this for 2 decades.
Okay, it sounds like we're fighting a little bit of a losing battle here in the West, at least.
Well, it doesn't have to be a losing battle, but you know, we just got to think pragmatically.
Okay.
That's all. You know, and understand our limitations and what we can and can't do. The money is there, but you gotta. And it's not only governments, agencies talking, but it's also government to government. Because the U.S. government has a different list of critical minerals in Canada, than Europe, than Australia. But apparently they all want to work in unison.
I do notice that difference between the lists, and it's like, are you not talking to each other?
Yeah, and copper is not on the U.S. or Australia's list, but it is for the Europeans and Canada.
Very strange.
The U.S. has 50, Canada and Europe, I think, have 22.
So we don't really know exactly what they're thinking.
Yeah, and
there.
I don't think they do.
No.
That's the depressing part.
So this is really interesting. Thanks for going through all of this.
Yeah.
The other thing I want to bring up, I think, in relation to copper is.
Oh, just so you know,
yes, tell me.
This takes a long time to explain, but on our website explorations.com, I have this same discussion in a free note on the website.
In case you want to read it.
You could access it if you want to get into more detail.
Okay, perfect.
Sorry.
Hopefully we can. If you send me a link, I'll add it in the description. Perfect. And so the other thing I was going to bring up in terms of copper is we hear all the time about declining ore grades, lack of new discoveries, and we had a reader write in a question about technology in the mining sector. Shouldn't technology be helping us a little bit more to find new deposits?
Well,
what's going on there?
They are. So what they're trying to do is make deposits, some deposits that we wouldn't have looked at before. Like, I'll give you an example if we have time.
Yes.
So I'm invested in this company called Arizona Sonora. Okay, and I don't really normally like to talk about companies in this, but it's an interesting play in that it was mined before, and it was mined for the enrichment blanket, which is chalcocite, which is higher grade. But they can only mine it to a certain level because back then copper was 60 cents. These guys have come back in, found more of these enrichment blankets, but now it's deeper. And where the other company, Asarco, back when they mined it in the 80s, 90s, would not have mined that. Now the copper price is much higher, they will mine it. So that's the copper price helping you. But then Rio Tinto subsidiary called Newton Technology that is working on a technology to leach sulfides. And here's another problem, is that copper, if you make copper, usually you make a copper concentrate. And where does that go? China, usually.
For the process, yeah.
And if you don't, and you can't, if you want that EV credit, you can't get copper from China. So that's another problem. So these guys, what they want to do is solve an extraction electrowinning for the sulfide to produce the cathode right there. So that's, to your reader's point, a technology that will help. But it doesn't work everywhere. It's not a blanket solution everywhere. The other issue that I'm seeing is the water constraints. If you're near the ocean, people are using salt water directly in their plants. I know a company that's that already operates one of those in Chile. I visited one in Egypt that does it from the Red Sea. And I know another development project in Chile that's planning on doing it. And so they get out of that argument by, hey, what aquifer are you tapping? I don't want, you to use our water. That argument's gone right now. So there are things people are doing, and if you're close to power, green energy, then people try to electrify trucks and get out of the diesel.
Okay.
Because the problem with lower grade, if you use diesel trucks, or if you have coal-fired power, your ESG footprint of the actual mine goes up. And then the question becomes, is the project investable? Because now you're creating an ESG footprint by generating the metal that we need for a carbon neutral society. So it's...
So this idea of, carbon neutrality, green copper, green other metals, things like that is sounding a little bit like a myth.
Well, a little constrained supply, if that's specifically what you're looking for.
Okay.
If you're saying, okay, but it's got to be green energy, okay, but it's got to have, water that it can't compete with anybody else. Okay, but it's got to be from these countries that we have free trade agreements from.
So you exclude so much by doing this.
Yeah, and then it's sort of like, it's a copper concentrate. Well, then it's got to go to a country with a processing facility that we have a free trade agreement with. Then it gets harder and harder. I mean, the U.S. doesn't even have a free trade agreement with Japan.
Okay, this is getting very tricky on the copper side, but it does sound good for the market, although bad for the world.
Yeah, sort of weirdly bad, weirdly good.
It is often like that, I find, when we have these conversations.
Yeah.
So because we've been talking about copper, I'm going to bring up molybdenum as well.
Okay.
Because it's produced as a byproduct, and I thought you might have some thoughts on the market. We've been seeing some interesting price action there, and just your thoughts on what investors might want to know.
So when I worked for Phelps Dodge, the other commodity that we produced the most in the world was moly, because a lot of copper mines, certain porphyries, produce moly as a byproduct, to your point. The problem when you have a commodity where most of the production comes from byproduct, that production is not sensitive to the moly price. So it will produce regardless of what the moly price is. But when the moly price goes up, there's always this idea that you could put a primary moly project into production. But the thing is that you put a lot of capital into building it. But the problem, the moly price, when I worked for Phelps Dodge back in the 2000s, was $2.50, but went almost up to $50 per pound at one point. What people don't realize is those same copper moly mines can change their mine plans to mine moly-rich seams within the deposit. So if people are assuming that they're going to produce only this amount of moly, they could go somewhere else and produce a lot more. And those mine plans change, and you wouldn't know what the mine plan is. So I usually stay away from primary moly mines, but if somebody has moly as a byproduct, that makes it all the more encouraging.
Okay, that makes a lot of sense.
Because then they could put in a processing facility to get the moly out, and the payback would be much better because the moly price is higher now. But most of their revenue is being generated by copper, let's say.
And I think people don't really know that there is that flexibility, because you hear all these things about it takes so long to put together a plan,
No,
et
we
cetera.
changed it pretty quick at Phelps Dodge.
Interesting.
We had some of the best miners. So they just changed the mine plan, and we would split this. The copper had tripled, but moly had gone up 10 times. So we switched the mine plan.
Okay, really? That's good to know. I
Yeah,
think
but the thing is that you need a mine that has that kind of
so
flexibility.
it can't just be any old copper mine.
But if you're like there and you need to do some underground development, that capital would be paid back quickly if the moly price is $50 per pound and not $2.50.
Okay.
Because you can get it to the market really quick.
Interesting. Okay, so we've gone through a lot of what's going on in copper and kind of the general resource sector. Are there any other themes that are on your mind right now that you want to impart to investors?
Yeah, I mean, the thing is that right now, like I was saying, on the financing part, like if you're looking at any kind of company, you would be very concerned about their working capital, depending on the company, because the pie is shrinking, and the better companies with the better management teams are getting a bigger share of that same pie, which is usually what happens when you have a risk-off sentiment. And that's what we're sitting at right now. So if you're going to invest and you think, wow, this is really cheap, just know that in 3 to 6 months they might be back to the market and that might be raising at a lower price.
Right, and we did do this past last time we talked, we did a whole interview on financings and what you can look for. So
Yeah,
I'll link
and
that
that's
as well.
probably more applicable to precious metals now
Yeah.
than the hysteria we have over lithium. But I can assure you that anybody that's got a junior company that's exploring for copper could maybe see more people interested in their exploration project than one that's looking for gold.
Okay, I think you've given us really so much to think about. Thank you for going through all these
worries.
topics.
Thank you very much for having me.
Really nice. Okay, once again, I'm Charlotte McLeod with the Investing News Network, and this is Joe Mazumdar with Exploration Insights.